This was not merely the tale of bullets in muddy trenches. The real struggle was waged far behind the front lines, on an invisible battlefield. World War I was also a war of ledgers, a ruthless contest fought in gold reserves, bond markets, and distant offices. While soldiers died, governments and bankers played chess with numbers. Financial moves made then did more than decide the war. They reshaped the global order we still live under. Europe in 1914 was a powder keg. National rivalries, colonial competition, and tangled alliances had turned the continent into a chessboard. Beneath grand speeches lay a hard economic truth. A war of that scale could not be sustained without enormous sums. The cruel fact was this. As leaders declared war, they also embraced a monumental debt that would burden future generations. At first, many governments believed the conflict would be short and financed by traditional means. Gold reserves, limited borrowing, patriotic donations. That illusion broke within weeks. Costs exceeded even the worst estimates. In 1914, Europe's finances rested on the gold standard. The nations promised each note had a fixed gold value. System provided stability but constrained governments. Gold reserves were finite. You could not print endless money without risking public trust. Britain, France, and Germany held significant stocks. But as millions mobilized and industry converted into war machines, costs soared. Germany alone spent over 10 million marks daily by late 1914. The arithmetic was merciless. Gold would not last. Governments suspended the rules. One by one, great powers abandoned the gold standard. They told citizens that currencies no longer rested on tangible backing but on faith in the state. That snapping of the gold bond became a major turning point. It exposed how fragile national wealth really was. Money and power shifted from tangible assets to printing presses, credit, and mass persuasion. The economic war began in earnest. Cut off from global capital and blocked by the British Navy, Germany turned inward. Berlin launched massive bond drives, urging citizens to mobilize savings for the fight. Propaganda was relentless. Heroic images, appeals to sacrifice, promises that investments would be repaid after victory. Germany raised well over 100 billion marks this way, but it was a gamble built on hope. When defeat came, those bonds became worthless. Millions watched life savings evaporate. That bitter disillusionment nourished extremist movements later. Britain held a decisive advantage. London remained the financial heart of the world. Confidence in the pound endured, and British finance reached across the empire. At first, Britain relied on short-term debt and patriotism, but it soon sailed into global credit markets. The most decisive turn was toward America. In 1914, the United States was neutral, but Wall Street smelled opportunity. Banks like J.P. Morgan became lifelines for Britain and France, arranging huge loans and coordinating purchases of arms, food, and raw materials. By 1917, when America entered the war, Wall Street had been financing the Allies for years. It was not charity. It was influence and profit. American banks reaped vast gains. The U.S. emerged not as a debtor, but as the world's chief creditor. France struggled under defense costs, relying on domestic bonds and foreign loans. Thrifty citizens bought state bonds, but larger funds came from across the Atlantic. Russia's financial effort was disastrous. The Tsarist Empire was vast but economically backward, its banking weak and reserves thin. Borrowing heavily from France, Russia saw confidence in the ruble collapse as defeats and inflation mounted. By 1917, the economy teetered and the monarchy fell. By war's end, the Allies had spent over $140 billion. The Central Powers about $60 billion. These sums dwarfed pre-war incomes. The result was not only towering debts, but the collapse of the old financial order. The gold standard lay in pieces. Inflation ravaged economies. In Germany, a loaf of bread would soon cost billions of marks. The burden fell on ordinary people, workers, small savers, modest investors. World War I marked the moment governments learned they could finance the impossible by severing money from reality, abandoning gold, printing expansively, borrowing widely, and masking harm with propaganda. Sound familiar? The pattern did not vanish. From the Great Depression to the 2008 crisis, modern upheavals echo, 1914. When guns fell silent in 1918, the world was devastated not only on battlefields but on balance sheets. The United States had become the planet's creditor. Europe was awash in debt. Britain owed America $4 billion. France $3 billion. The war made Wall Street the new financial capital, usurping London without a single shell fired. Yet this ascent was not painless. When wars are bankrolled by debt, repayment itself becomes a new war. Britain and France demanded reparations from Germany. Versailles set an astronomical 132 billion gold marks to punish and cripple. It was unrealistic. Germany could not pay. Every demand deepened instability, leading to the hyperinflation of 1923. Not an accident, but the outcome of impossible obligations. In 1925, Britain tried to restore the pound to its pre-war gold parity, a grave mistake. The economy was shattered, industry weakened, debts heavy. Forcing the pound back was like resetting a broken bone too soon. The result? Deflation, unemployment, unrest. Meanwhile, the United States, brimming with gold and credit, lent heavily to Europe, creating a circular flow. Germany paid reparations to the Allies. The Allies repaid debts to America. The Dawes Plan of 1924 and the Young Plan of 1929 formalized this fragile loop. Money was recycled until the Great Depression collapsed it. World War I was not merely military history. It was an economic turning point showing how financial illusions shape destiny. Governments could manipulate money, persuade citizens, and turn debt into patriotism. Winners often sat in boardrooms, not trenches. So when central banks today call inflation temporary or governments push debt ceilings higher, remember 1914. Recall the moment gold was abandoned and borrowing the future became routine. Every modern financial crisis traces roots to that war. The economic front of World War I is not a closed chapter. It is our foundation. The lesson is harsh. When money detaches from real value, it becomes a tool of manipulation. Governments will find ways to fund wars, bailouts, and crises, and they will always find ways to make you pay, by taxes, inflation, or the erosion of savings. True wealth is not numbers on a screen. It is resilience, knowledge, and the ability to see through illusions. That is the only financial freedom history offers. One final thought. History does not repeat exactly, but it rhymes. The script written in 1914 reappears in new forms. The ending often stays the same. The powerful are protected and the uninformed are sacrificed. If you draw one lesson, take this. Never assume money is valuable simply because it is printed. Never trust a system solely because authority says so. Truth hides in balance sheets. History is the teacher that does not lie.